Good evening, ladies and gentlemen. Welcome to Walk the Block, Navigating Digital Finance, where we are taking a look at the markets, taking a look at labor data, and we're taking a look at the latest from the SEC and the new direction that they're trying to take the enforcement specifically for the crypto task force. So that being said, folks, I am your host tonight, Zenith. Outside of that, I got the usual suspects with me here tonight. Starting it off, we got Tracker. How you doing?
Doing well. Let's get into this. A lot of fun stuff.
Absolutely. Got Agent J. How we doing?
I'm doing excellent, my friend. Wonderful Monday. We streamed a bit earlier in the Telegram talking about Hex and talking about all of the different moves that the OA has been making over the past week or so. The TLDR is very bullish. We did some charts. We did some news analysis. And it was a fantastic Monday.
Glad to hear it. And last but not least, we also got Dace. How you doing, man?
I'm well, sir. I'm well. I participated with the stream earlier today with my friend Agent J. Have been glued to the crypto news this week. It's been an eventful 7 days for sure.
I heard the stream earlier today. It was fantastic. So I will definitely have to go catch up with that at the day job to unfortunately take up my time today. But we're here tonight to talk with all the good folks at home, including Mr. Centurion 54X himself. He says, "What's up, my fellow crypto enthusiasts? Good to see you, my man, as always, and we hope that we are going to provide some interesting conversation tonight. And as always, if you have any comments, questions, or concerns, please throw them in the chat. We will cover them live on stream and get to whatever it is that you guys have to think about the topics as well. So with that being said, Mr. Agent J, are you ready to get to the TA?
Yeah, absolutely. Let me go ahead and share my screen here. There you go. Let me know when you fellas can see that.
Sure can.
Go over Bitcoin. So, not really much has gone on over the past few days for Bitcoin, right? And so the story pretty much remains the same, even though we got a whole day's worth of data for Monday, right? And suffice it to say, I still maintain my long-term bullish stance. And even on the short term, we have flipped bullish as well. So I'm just going to do a quick little update for the folks here and the folks at home. If you guys want to look at a more detailed high-level view analysis, considering the 60-day cycles and also some trend and price-based analysis, please refer back to the episode that we did on our flagship DGen Roundtable show yesterday, and you'll get some of the insight there. So for today, I'm just going to focus on the smaller time frames because I know people always want to know, well, what is going to happen next? And so we're going to go over both the bullish and the bearish price scenarios for Bitcoin, because an analyst must always have a bullish and bearish scenario. So first and foremost, the bullish count. On the 15-minute, we are taking a look at an impulse for Bitcoin, right, with a 1 and 2, right, the purple count, 1 and 2 already in. In terms of price, what can we expect from Bitcoin in terms of price over the next few days or so? If the count and the trend were to remain bullish, and considering the fact that we're getting some very big CPI data as far as both the core CPI and then the regular CPI on Wednesday, that could really send us into higher prices if that data comes in bullish. So what can we expect in terms of price over the next few days or so for the bulls? Well, if you take a trend-based fib extension taken from the very start of wave 1 to the end of wave 1 and then to the end of wave 2, the most common extensions for the wave 3, right, here in purple, are as follows. We have a minimum extension of $100,629 for Bitcoin. That is your minimum target for the bullish count. However, we know that your 3 tends to be the most impulsive of the 3 motive waves when it comes to magnitude, right? So the very common extension for wave 3 is actually up here at the 1.618 fib extension, and that will put us at $102,998 for Bitcoin, right? This is a more common extension target, and if we get super bullish data coming in on Wednesday, then the next reasonable target for a wave 3 is up here at the 2.618 extension. And that places you at $106,951, right? Call it $107,000 flat. Now, let's consider if this purple wave 2 is not yet in, right? Let's say we are still looking for lower prices to complete that wave 2, right? If you take a fib retracement, and this is taken from the start of your wave 1 to the end of the wave 1, then the more common retracements for your wave 2 are as follows. We've already hit, oops, let me bring that back. We've already hit one of the targets, right? The 382 at 96,953. However, this is a very rare target for a wave 2. It's not impossible, but it is fairly rare, which is why we're considering that we might still have some downside to go before the completion of the purple wave 2, right? The more common targets for your wave 2 is between the 0.5 Fibonacci and the 0.786, which puts us between 96,523 and 95,489 with an invalidation at the 886, clocking in at 95,130, right? Now, if we were actually to go and do some live analysis here, right? If we are looking at a wave 2 and we're looking for a zigzag to the downside, right? An A here, a B here, and a C. Let's take a trend-based fib extension to see if we can get some more accurate price targets taken from the start to the end of A to the end of B. And we're looking at the 1-for-1 fib extension at 96,660, all the way down to 95,773. Let's take our Fibonacci and see if we could find some confluence. Not really much in terms of confluence when it comes to the Fibonacci's here. But that's okay. That's quite okay. That's quite all right. So that is your bullish count for Bitcoin. Now let's consider the bearish count. Right? The bearish count for Bitcoin is, instead of an impulse, you are looking at a W, right? WX in, and you're looking for a Y yet to come in, right? A double zigzag pattern. And so for the bears, your price targets are as follows, right? If you take a trend-based fib extension from the start to the end of your W to the end of your X, your Y, the more common extension for your Y, right? Because this is a double zigzag pattern that we are taking a look at, is anywhere between the 1 fib extension all the way down to the 1.618 fib extension, right? So that's between 92,778 to $89,804. So just slightly above the low that we made, I believe sometime back in early. Where did we make that low? That $89,000 low over here in mid-January, right? So just slightly above that low for Bitcoin. Right. So you'd be taking a look at something along these lines, right? You got a zigzag. So there's your A and your B and your C to complete that Y before continuation to the upside. All right, something along those lines. Now, invalidation for this bearish scenario is as follows. Right? If you take a fib retracement taken from the start to the end of your W, right? And your invalidation for this zigzag is the 0.7 fib retracement at 98,525. Now, that doesn't mean that the correction is necessarily over, but you invalidate the zigzag scenario, right? Which means if you are going to get lower prices, you're not going to get as steep of a correction on the way down for that wave Y that you would have received if this pattern was a double zigzag, right? You're probably going to get some kind of flat or a triangle instead. And by their nature, right, flats and triangles tend to be more sideways and range bound as opposed to zigzag patterns, which tend to be a little bit more steep, right? So there is your bullish and bearish price targets for Bitcoin for both for the foreseeable future. And by foreseeable future, I mean like the next few days or so.
Jay,
Zenith?
something that stood out to me
Yep.
is that even your most bearish level of 89,000, corresponds with a support level that we spoke about in DRT on some of our emergency streams, and potentially even last week. There's that big gap through all of the 80,000 range in Bitcoin's price chart, and even your bearish level is maintaining that 80K range because we're in the pitch of the bull market, right? Something to bear in mind.
I don't really get super concerned, and I don't flip bearish on the long term unless we lose the $85,000 level. Because if we take a look back here on the daily, just so that I give people a larger view of the chart, right? The $85,000 level, if we zoom out here a little bit, right, is basically the last little level of support that we have when it comes to the range that Bitcoin has been trading in for the past few months, right? This wick down here, this is basically the last level of support, right? You're hanging on by a hair basically at the $85,000 level. And if you can see, there is pretty much very little support below there until this wick here, which would bring you at another 13% drop from $85,000, right? If we went back down to these levels, then I would heavily reconsider the current caps that we have been going over the past few months. And I would have to really consider the possibility that the bull market is indeed over and that you have this count in for the bears, right? Let me zoom out here a little bit, right? We went over this on Sunday. 1, 2, 3, 4, 5 in, and then we're heading all the way back down. Right? Bull market's over, bear market, here we come. Right? So you definitely don't want to lose that $85,000 level on the way down if we do get lower prices within the foreseeable future.
I mean, Jay, I really would say I really don't want to see it break that 91 level because there's been so many times it's bounced off that support level.
Yep.
Same. That's much stronger long term. If you can keep holding that above that line, that would be something very impressive. I don't want to see it violate that. And we're starting to form into this night tight, and plus we're starting to form in this. I mean, we're forming a sideways channel now that's been started back in November. We've been going a sideways channel,
right? If you can see here, we have been range bound for the better half of the last few months or so, right? The last 2 months. So it's not really uncharacteristic of Bitcoin, right? Because you could see that for the entirety of this bull market, every single time Bitcoin has made a bullish move up, right? We have spent a few times in multiple ranges, right? Currently, we are here. We had another range here, right? That was between, what was this? About 75,000 and 55.
That's like 10 months sideways right there.
Right? And then here, during our macro 2, right, we had another sideways range that we were consolidating in, right? So I think people have been fairly exhausted this bull market because this is I think the only 4-year cycle we've had since the inception of Bitcoin that every single time we've had corrections, we've spent it in range bound corrective structures. Right? I mean, just compare it with the last cycle. This was the COVID dip. Sharp drop to the downside, and then boom. So this was short and painful.
Look at that dragon's tail.
Yeah. Short and painful versus apathy. Right? These kinds of sideways range-bound consolidation patterns, this is what creates new weak hands every single day and forces people to capitulate. Right? Because these are liquidity grabs, right? Liquidity grab up here, one down here, back up here, fake people out. Are we in a bear market? Are we in new all-time highs? Are we in a bear market? Are we in new all-time highs? Are we in a bear market? Are we in new all-time highs? Right?
Put through the meat grinder, man.
Yeah.
To me, it's a very healthy looking chart. You're building up support. You build up to the next step, sideways consolidation, up to the next step. It's a very healthy. To me, it's reminiscent of just basically how TradFi does, how it operates. I think now that TradFi has been heavily in here, they're starting to have more of a, and with their bots and all this other stuff, I think that's why you're getting these more realistic TradFi consolidation moves in a bullish market long term, much more sustainable too.
Mhm.
Which ties into the theory and the thesis that are we going to have potentially a super trend or something like that, where we actually break out of this 4-year cycle and actually there's more of a parabolic move because of just mass adoption. When I say parabolic move, not over the course of a month or two, but just over like a longer term. Like maybe this bull market extends out longer than ever. And that could be also because, I mean, there's a lot of things you can speculate, but artificially it was suppressed because of the SEC over the last year. So a lot of stuff that you can feel it.
I've got another chart that I'd like to show very quickly if I can. Let's see here.
Absolutely.
I want to show very quickly. This is the Bitcoin network difficulty chart.
Ooh, I like this chart. I like
so
this chart very much.
This explains why we are more bullish than bearish in terms of our overall personal sentiments, I would wager. If you look at gray line is your price, blue line is your difficulty to create and mine Bitcoin, right? Look how long we've spent under the blue line. So, to quantify trackers super cycle, right, or these sort of full-fledged or right translated or parabolic runs, you have to run up above that blue line like we did back here, through all of this bull run, right? Both of these tops are well above the network difficulty. So that means that, asset speculation was at a fever pitch relative to the difficulty to create the asset, right? And we've been under ever since, since the bottom, since the bear market, right here in late 22, it looks like. And so, exciting times as you see things move up. Network difficulty has hit a new all-time high here recently. And so those are things to watch for, and reasons why small time miners get pushed out of the game, and the game is going to change as it grows. But certainly this looks to propel things in a very exciting direction.
Yep.
It's also signs of more maturing of a market too. So yeah, that's a great chart.
Well, and the distance, right? The distance from the price chart, from the price to the difficulty, that gap is reminiscent of a bottom. I mean, we're at a pretty remarkably low gap between the price and the difficulty. And so to be this high in our overall USD price and it have these features that are commonly characteristic of a bottom, it looks promising to me.
Appreciate clearing that up for me, Dave. That's reassuring.
Sure.
Appreciate it.
Gentlemen, we do have a question from the audience. We got 54 Cent coming in. He said, I heard over-the-counter Bitcoin was near 150K. Where and how do you guys think BlackRock and governments will acquire Bitcoins?
I have my thoughts on this, but I'll let everybody else speak since I've been speaking for like the last 15 minutes.
I mean, we've talked about this quite a bit. Where are they going to buy it? They're going to go through. They're not going to buy it on the open market. They're going to go through a middleman or a mediator. Most likely, it'll be through somebody like Coinbase or somebody of that nature who's already done all the heavy lifting, and then they're going to be acquiring it. We've talked about this many times, but guys, what do you guys have to say on it?
I think you go for it.
I was going to quickly say that Coinbase is the custodian for BlackRock, for lots of other firms. Look for there to be some interesting interaction between the U.S. government and Coinbase, in my mind. A more direct partnership with Circle, I could see down the line. I think Coinbase and the stablecoin conversation is going to be an interesting conversation in terms of how the government synergizes those things. Could create an easy backdoor or avenue, let's say, for the government to acquire.
True. After our slight professional disagreement on the other stream, I think I'm actually kind of convinced by your guys' argument, which is that the government wants to buy such a large amount that it's actually not really super feasible to do that off the open market, which means OTC is going to happen, but at the same time, it's got to come from somewhere. And a lot of the players that are large enough that have the size of Bitcoin that governments would like to purchase, I think those are the kinds of people, like Jay mentioned the other day, is like, those are the people that are never selling. Like, you will never get them to sell you that Bitcoin. Like, that is gone forever, effectively. So I think it's going to come through probably seizures. It's going to come through wherever they can get it, OTC. anyone who's willing to sell it to them, once they have the authorization to start buying it, you're going to start to see them just try to like just chunk as much as they can and just churn and try to get it. The open market is an option, but I highly doubt it. But honestly, OTC Bitcoin at 150K, it's not terrible. If anything, it's like if they overpay OTC, it might encourage people who are those more diamond-handed to actually sell so that they could just immediately go rebuy up on the open market, which would drive price. But I don't know. I wish I knew the answer to this one, but I think it's gonna remain cloak and dagger for a while, and we're probably not going to get a good answer until we actually start seeing it happen and start seeing the on-chain data.
Yeah. Centurion.
Well, an interesting thing to think about. Go ahead, Jay.
I was just going to say that for me personally, if I were so inclined to sell you my Bitcoin OTC, you will be paying me a premium. Because like Z said, these are people who, like the only people that are going to sell are people who want to get out of Bitcoin in US dollars, right? They were only in here for the capital appreciation in terms of USD. But if you were to somehow convince some diamond-handed people to sell you their Bitcoin, you're going to be paying at a premium. I am actually in disagreement with the idea of OTC buying. I think because you have a large entity like Coinbase basically in bed with entities like BlackRock, right? Because they are the primary custodian for these ETFs, both for Bitcoin and Ethereum, right? And it's just not just for BlackRock, right? It's for Fidelity, it's for Charles Schwab, it's for Van Eck. I think what has been happening over the past few months, like I said, there's a reason why we're range bound. If my best customer, in this case, Larry Fink, wants a discount for Bitcoin, why not dump the price a little bit? Why not liquidate some of these 50 to 100x longs, push the price down anywhere between 20 to, 10 to 20%, give these guys a discount, right? Even though we know that the balance of Bitcoin and Ethereum on exchanges is at an all-time low, these capitulation events during these consolidating sideways movements create more supply for these asset managers to want to buy, right? Because people you're creating weak hands every single day. And so I think the majority of the Bitcoin that they're going to acquire is going to happen through these manipulation tactics, right? You're going to FUD some people out in the market, and then when market opens on Monday, you find out that not only Saylor has bought more Bitcoin because he bought more Bitcoin today, but BlackRock and others, BlackRock, Fidelity are probably the top two, right? Fidelity, especially since they've been buying for quite a while, they're buying more, right? You're not going to convince the diamond-handed Bitcoin maxis to sell you the Bitcoin, right? You're going to have to get this from exchanges, right? And the way that you replenish the supply is by creating these capitulation events by, sideways ranging for a long period of time.
Our friend does provide a good third option. I don't know if it's going to be a large enough crowd of folks to actually satisfy the demand that they have for it, but what if they bought from miners?
It wouldn't make much of a dent, Centurion.
So to answer the question on screen, it says if they buy under the counter or from miners, will we see major price appreciation? No. The primary effect here is that if you want price appreciation, you got to affect the liquidity pools. Going OTC effectively bypasses that. You could see secondary effects, which is that the person you just paid, like we talked about previously, if you pay them a premium, then they might be incentivized to go buy up off the market as it stands, which that would create price appreciation. But miners are a unique situation where miners sell Bitcoin to pay electrical fees and like their lease and any loans that they have for purchasing equipment, that kind of stuff.
Yeah, they're overhead.
Yeah. So realistically, if you OTC with miners, you probably won't see price appreciation, in my personal opinion.
Well,
also
there is a something.
Let me just cap this question off real quick, Tracker. Centurion, also remember that every single 4 years, the inflation rewards for Bitcoin get halved. So even if you took a significant supply of amount from miners, they're getting change, man. Right? I mean, we're at what, 4 something Bitcoin per block reward?
I want to say like 3.25 or something.
That's a lot of Bitcoin, man. And like BlackRock and these other institutions are buying thousands by the day. You're not going to be able to satisfy them with just a minor inflation reward. So
3.125. 3.125 per block.
Yeah.
And that's every
Well-
10 minutes. So, oh gosh, 24 times 6. It's probably like 450-ish. Yeah, I see you there. Good quick maths. I see you over there.
So to answer his question, I mean, it depends who's the miner. I mean, Fidelity's been Bitcoin mining since 2014. They probably have a stash. So somebody like Fidelity or BlackRock or in the other larger, but bottom line, it'll be through an institution and then of course we talked about this in more detail last time about how they would buy it. And they would buy it in probably quarterly chunks. They would forecast it that they're going to be purchasing it for full disclosure and purchase it over time. And then they have to say, like, what do they say? 20 years that they would end up holding it if it was become a reserve. Yeah. And I think the telltale here is really see what the states are going to do first, because there are already quite a few states already looking at creating Bitcoin reserve or crypto reserves.
The governor of
for a lot
Florida,
of the states.
the new governor of Florida. Go ahead, Track.
Yeah.
I'll pull this up while you're speaking. So just to kind of
Yeah, sure. I mean, yeah, I hear you. Yeah, but bottom line is there's like 15 to 20 different states already looking at Bitcoin being a reserve. So I think you're going to see probably action in some of these states faster than you will see the Federal Reserve going. Could be wrong, but I think that some of these have already been way ahead of the curve and trying to get ahead of it, and they've already been looking at it aggressively. So I think you might see something come out of that. And of course, it's going to be a lot easier for those states to buy because it won't be such a large buy compared to the Federal Reserve. But that could kind of tip the hand on what they may actually do at the federal level.
I can't find the Florida one right now, but there was another state, North Carolina. My fob was about to come out. North Carolina, 6 hours ago, just sent from Watcher Guru to create a strategic Bitcoin reserve. So today it was North Carolina, and then Florida was the other one that I read today. I think the Florida one is just a proposal. And it seems like the North Carolina one is also a proposal, right? It's still just a bill. But yeah, man.
Alrighty, gents. Let's head to our first article of the day. We have some economic data that came out last week. Jay, do you mind running us through this? What do we got here?
Yeah, absolutely. So a lot of labor market data came in last week, right? And the TLDR from all of these numbers that we're getting is basically bullish, right? The JOLTS job openings contracted slightly. The forecast was 7.8 million. Consensus across the board was 8 million, but it came in a bit lower than expected at 7.6 million. Let me 1 second here. Okay. Sorry about that, guys. The customer waiting for me. But they can wait for a little bit. The ISM services PMI, right? This is basically a gauge of the selling price points for particular industries, right? In this case, I think this takes into consideration which industries. This is for which industries? Do they specify which industries are they talking about here? They usually do. It doesn't look like they do. I'll pull that up, which particular industries this survey was conducted in, right? But the important note here is that the forecasts, the actual numbers came in lower than the forecast, right? Which means the final selling point of goods and services within these basket of industries, right, came in much lower than average. Which means that prices are not inflating to the degree that people were thinking, right, a few months ago when the Fed came out and said that there's a potential resurgence for inflation. Right, so you can see that we're painting a picture here for the Federal Reserve meeting to potentially start slashing rates again during that March meeting. All right, further, you had non-farm payrolls and unemployment rate come down. Right, again, non-farm payrolls. Right, again, is just a reflection of the labor market contracting from a forecast of 205,000 to an actual number of 143K. right? And what do we know about labor market conditions? Jerome Powell likes labor market conditions to either remain stable or slightly contract, right? Because that means less inflationary pressures to the upside. And then finally, you have unemployment rate coming in at 4%, which is another bullish sign because it's remaining around that 4% area that the Federal Reserve likes to see, right? It's not coming down significantly. It's not coming up too fast. It's hovering around that nice 4% area. And what were people really scared about once this number started climbing really, really hot so fast? It was that, well, now we might have tamped down on inflation, right? But if unemployment is going up so fast, right, at the clip that we're seeing it, then are we at risk for a recession, right? So that the fact that the unemployment is remaining steady is going to make Jerome Powell happy as well, right? And so again, the TLDR of what the labor market data gave us last week was that we're overall bullish, both in terms of unemployment and both in terms of a slightly contracting labor market, right? And the thing is, even if we got some like slightly higher numbers, remember, Jerome Powell for the past Federal Reserve meetings has come out and said, we are not concerned about the labor market introducing upward inflationary pressure, right? The labor market at this moment is not a concern for inflationary pressures to the upside, right? And so we got the opposite of that. So bullish, dovish, however you want to call it. So that's the TLDR for the labor market data that we got last week.
Yeah, the data that we got last week, there's a handful of points that all move together, but the unemployment rate actually dropping from 4.1 to 4.0, that's very good news. But the rest of it is much less good news, because if you look at the non-farm payrolls, the previous was 307,000. The actual for this one was 143, so that's like half, and it came in lower than consensus and the forecast. And then also the consumer sentiment also came in lower than was predicted as well. So it's that kind of stuff that shows that we are getting some mixed signals, but overall the market was not too happy with all of it. That was the day that we had the S&P 500 drop by about a full percentage point. It went from 606 to 600, but it's actually made back some of the gains today, and I think we're sitting right around 604, almost 605 right now. So it didn't completely tank the market, but the day that the data came out, the market definitely reacted to it. On the crypto side of the house, that was the second of 4 days where we actually closed pretty much right where we started. So if you go look at the charts, it's all these candles that just look like a tiny, tiny bar, but the wick on either side is a decent size. And what that says is that, yeah, sure, it fluctuated a bit, but at the end of the day, we started and stopped at pretty much the exact same spot. And to see that for 4 days in a row is a bit of an anomaly, but at the same time, it's well within the range. And again, it also comes down to when you measure the market open and close timing. So the crypto markets obviously measure on the Zulu time or the time over in Greenwich, England, and then you just have to do your time zone calculation. But yeah, it's depending where you measure it, but overall, nothing too crazy with Bitcoin. Markets didn't like it the day of, but they've recovered since.
And remember, this was a short assessment period, right? Compared to the next meeting where he's going to have a lot more data to take a look at. I think look to have the March FOMC meeting be a lot more substantive in terms of their policy and direction moving forward. I think we get new dot plots at March. Correct me if I'm wrong.
We do.
Yeah.
We get the updated data document. So looking forward to seeing that one.
For sure.
All right, so I'll ask the dumb question here. So knowing this is coming out, do we think there's going to be enough to really move the market on these numbers that are going to be coming out, or is it going to be mainly just kind of mundane and we stay range bound going sideways?
I think that the inflation data that comes out this week is going to be a big player in that. And if the inflation data is not great, it could move the markets a little bit. But if it comes out like average, I feel like I'm saying the obvious here a little bit, but like if it comes out average, it'll probably stay pretty standard. But at the same time, if we show an improvement, that could make the markets kind of happy. However, the projections that I've seen at this point are showing that we're probably going to see inflation around 2.9%, which is slightly up from the last one, which means that I wouldn't be too surprised if we saw a little bit of a dip. But overall, I think the markets have other larger forces going on right now. Like when it comes to the S&P 500, I think you actually see more impact from all the different tariffs that are starting to get imposed by the Trump administration. We're seeing the market respond to those more, but at the same time, the CPI data is one of the major data indicators. But at the same time, we will get another inflation data indicator before we get the next Federal Reserve meeting. And those are the ones that can really spike the market, is the Fed meetings. The CPI plays into it, but the Fed meetings really are the ones, especially if we get a change in policy.
Here's the thing, though, fellas. Even though the rate year over year for inflation is staying at 2.9%, forecast for month over month is decreasing, or at least the forecast and the consensus is down anywhere between 0.1 to 0.2%. And then more importantly is the core inflation, right? Because as we discussed yesterday, that's the number that the Federal Reserve cares more about because it extracts that volatile food and energy variables, right? And that's also forecasted to come in lower, which carries the momentum from our last print, right? And if the Federal Reserve sees that core inflation year over year, right? Because year over year is what we care about, because that's the long-term 12-month outlook, right? Month over month is important, but not as important as what the overall trend looks like for the entire year, right? Year's worth of data, right? Because it's a rolling 12-month average that they're taking a look at. And if that number is going down, like print by print, that is a good sign for the Federal Reserve, which again makes it more probable that Jerome Powell is going to give QE for everybody.
Which is the one that that's the powdered keg essentially that would light everything off. Well, I feel like it's going to need some big news event, bearish or bullish, to break us out of this sideways range bound trend is basically what I'm getting at. And I think we're going to stay consolidated in this lane until that comes out. Jay, question on that. I know we've beat this one up a few times, but do we have a rough idea when you think Jerome Powell would make that call? Obviously it would be March.
Yeah, it would be March. I think
yep.
March is a really pivotal one for us guys, not just because we're going to get his decision based on 2 months worth of data, right? Like Z said, right? We got 2 months worth of data coming in. So this one is for January that just came in, and then we're going to get the next one and it's going to be for February. And so this is really the first 2 months of data that we're going to have when Trump is president, right? Z's mentioned this multiple times, right? So it's going to be very pivotal. But also remember that we're going to get the summary of economic projections during that time as well. And that's even more important because that gives a collective view of what each Fed participant thinks the overall trend for the market is going to be, I think, within the 6 to 12 month outlook, right? And if the overwhelming number of participants says, I think we should bring the number of cuts down from 2 to 3, right? Because that's what crashed us in December. They were like, yeah, we had 3, but now we're revising it to 2. If during this SCP, they're like, yeah, you know what? Things are looking good. I know we said 2 during the December SCP last year, but now we thinking like 405.
And then they're going to be like, gotcha.
That's going to send us.
That
right?
would be a
Because
pump.
that's so bullish.
Exactly. But that's what I'm saying. I think everybody was quick to get a little bit that wick sell off because they went from 3 to 2. I think that was people were way too knee jerk reaction on that one.
That's how markets are, man. They try to.
I know, man. They're like troubled children on crack. I get it, man. They're not stable by any means.
Yeah. These
Very
DJs,
true.
man.
All right, gentlemen. Any final thoughts on this one, or are you ready to move on to the SEC?
Let's go on to the next one.
All
I was
right.
really going to try to segue it and say I think the SEC news is going to be the bigger catalyst for the chart. So
That definitely could be, especially for the crypto stuff. So
Right.
coming to us from our friend Nuclear Herbs, he is the Pulse Chain lawyer, former naval officer and lawyer as well. So he is a guy that does great work in the space. If you're interested in anything legal, crypto, especially Pulse Chain, go check him out. But we have this. He says, everyone needs to read this. There are many positive comments in here. Check out paragraph 3 talking about coin and token offerings. And he thinks it could help in the Richard Hart ecosystem lawsuit. But what we're referring to is this. This is from February 4th. This is a statement from Commissioner Hester Pierce. Hester Pierce is not the head of the SEC, but he is one of the multiple governors on the commission. So he has a few fellow commissioners, and this is just his view, but he is one of the few people on there. And notably, we kind of don't have a chair right now.
What's
And
that? You did it yesterday too. You keep calling Hester he.
Is this a lady?
Yes, she's crypto mom.
I thought that was I thought that was Cynthia Loomis, but
No, sir. Hester has been dubbed crypto mom, but very endearing term by crypto Twitter. Cynthia, I don't know if they gave her a nickname. But crypto mom is Hester Pierce. Yeah, that's her. There you go.
Very well.
I was like, why does he keep saying he for Hester? Did she come out or something?
Hear me out. I've never
elementary
met a
school
lady
teacher.
named Hester, but I've heard of Esther, but not with the H. Regardless, while she is writing this article, we do have Paul Atkins, who was officially nominated by the Donald Trump administration to become the new chair of the SEC. He is not yet on the docket. So he's going to first have to go through the Banking, Housing, and Urban Affairs Committee, aka the Banking Committee. And you can see that they have a lot of other people on their docket. But if you go down, you can actually see that they accepted the recommendation. So now he's on the docket at some point in the near future, hopefully. So whenever they get around to it, he will get confirmed by this committee, and then it will go to the overall Senate for a full vote. And that is when he is going to get confirmed. But as of right now, we just have confirmation that they received the nomination. Outside of that, though, I believe Mark Uyeda is currently the acting chair of the SEC.
Yes.
So once we get Paul Atkins actually in as the confirmed chair, then that will create some good, clear leadership over there. But until then, this letter from Crypto Mom is actually a pretty good indicator of the new sentiment and what's to come down the pike. So it's a bit of a long letter. I'll read out some of the main important points, but overall, this is talking about their newly announced crypto task force and the roadmap for it. So to get down to it, this is Hester Pierce's opinion, first and foremost, but let's get into it. So it took us a long time to get into this mess, and it's going to take us some time to get out of it. The commission has engaged with the crypto industry in one form or another for more than a decade. The first Bitcoin exchange-traded product application hit our doorstep in 2013, and the commission brought a fraud case that had tangential crypto element that same year. In 2017, they issued DAO Section 21A, which reflected the first application of the Howey test in this context. Since then, there have been many enforcement actions, a number of no-action letters, some exemptive relief, endless talk about crypto in speeches and statements, lots of meetings with crypto entrepreneurs, many interagency and international crypto working groups, discussions of certain aspects of crypto in rulemaking proposals, considerations of crypto-related issues and reviews of registration statements and other filings, and the approval of numerous SRO proposed rule changes to list crypto exchange traded products. That's going to be the ETFs that came out earlier in 2024. Throughout this time, the Commission's handling of crypto has been marked by legal imprecision and commercial impracticality. That is some strong language right there. Consequently, many of the cases remain in litigation, many rules remain in the proposal stage, and many market participants remain in limbo. Determining how to disentangle all these strands, including ongoing litigation, will take time. It will involve work across the whole agency and cooperation with other regulators. Please be patient. The task force wants to get to a good place, but we need to do so in an orderly, practical, and legally defensible way. So, gentlemen, at a glance, how does this make you feel as a crypto investor? Is this inspiring confidence, or is this just kicking the can down the road?
TBD. I mean, it's a first step, but there's a lot of jargon here. I mean, it's like, okay, what does this mean? There's nothing. They're collecting. This is basically them. It's almost like the 90-day rule when you take over a department or something in a company. You're just trying to analyze and take all this information and data points in to figure out, okay, what in the heck are we actually doing to understand the actual essence of the problem. The fact that they're interviewing people that are actually real people, they're real subject matter experts in the industry, that's very reoccurring. Sorry. Then the other thing is, like, what about are they looking at the ones that were very anti-crypto? Are they getting their input, like Gary Gensler? I would love to see what do they actually extract from him on what was your hangups, or even better, who was telling you to push back on it? What was their problems with it? I'd like to hear both sides of the argument to figure out what it is, or was it just a pushback because they weren't sure how to handle this because it was brand new. I think it's the first step forward. What I'm scared about is this being dragged out for a long time. That's one thing I think everybody's really concerned about, because anything the government touch seems to take forever to come to fruition. And like we've all said, you got 100 days from the day the executive branch was put into power. So the clock is ticking. How quick can they turn this around? Or are they going to do it to where it was like on February 4th, I believe, when we did the live Telegram Tuesday, where it was like a dog and pony show. It was basically everybody patting on the back of each other, telling how great they were, yet nothing really transpired from the meeting outside of them saying, yes, we're looking heavily at stable coins. So first step forward, great. Okay, what's the next thing? Like, I'd like to see a roadmap timeline. A legitimate timeline. Give me some dates you're actually going to be trying to hit on the way there, and not just say, yeah, we're getting to this, we're working on this. I don't want fuzzy logic. I want finite date set. So that would be nice to see.
That's fair. To answer your finite dates, though, if you remember back when we covered the executive order that Trump put out, there's a 30-day and a 60-day timeline, and then also the long-term 180-day timeline. So 30 and 60 was to identify all the crypto-related stuff. 60 was when you're going to solidify all that into a report and identify what you want to keep, what you want to get rid of, and what you want to improve. And then the 180 was their finish line for when they hope to actually have the legislation created and start going through the houses of Congress. But overall,
Appreciate
the reason
that.
that, yeah, for sure. The thing that really stands out to me in this paragraph, this is the first real paragraph of substance, but this is a noticeable change in the way that the SEC is talking about not just crypto, but their actions and their involvement with crypto. It's actually self-reflective and talks about some of the ways that they failed and some of the things that they're looking to improve on. So obviously, I mentioned it multiple times tonight already, which is that there are multiple commissioners on this panel. So it's not just one person. Granted, the head also is kind of the spokesperson and the leader of it, but at the same time, they're not completely ruling. So it does beg the question, was Gary Gensler the core cause of it previously, or was it the rest of the people getting in alignment? We saw in some of the votes, it went 3-2 a lot of times, which means that there were 2 dissenters on here still. And I'm pretty sure that one of them didn't get reconfirmed, which means that Gary Gensler and another dissenter are out. So as it stands right now, it's 2-1 pro crypto when it comes to the governors or the commissioners, the governors on the commission.
You know what's funny? Most of these items, when it came down to a split, whether to for or against, Gary Gensler had basically had to surrender his vote to for.
You know,
So I just thought that was very poetic. But in terms of how does this statement in particular make me feel about the outlook, both the short and the long term? Bullish, certainly, but again, the government moves at a snail's pace, and so we don't even have Paul Atkins confirmed by the Senate quite yet, right? And so would it be wonderful if they were able to resolve some of these outstanding litigation prior to that? Sure. But I think the speed at which they're going to be able to do that, there's just way too many variables, right? Like, how have the judges ruled, right? Do they have the ability to just drop these cases just like that, right? Or would they actually need to speak with the judge presiding over that particular case, right? Like, how informed are they about each of these particular cases, right? Like, did they get briefed by the committee that was leaving before they left, right? And to what degree? And so there's a lot of variables that you have to consider when it comes to like how fast can this new SEC basically resolve all of the issues that were caused by the SEC chaired by Gary Gensler. And the question is, like, if I were to take a bet on the government, it's that they're going to move at a snail's pace. But long term, it's going to be bullish. But I'm not going to expect anything too fast coming out of any federal agency, to be quite honest with you.
That is a very fair take, I believe. And to add on to a little bit what you said, it's not just that they inherited Gary Gensler's problems, but they inherited the backlog of work that he created, because they talk about all those pending cases and all those pending rules that were proposed, never finalized, all that stuff. So in the system right now, it's already backed up. And we don't even have the confirmed chair yet. So we got to get that first so we can get some clear leadership so we can start going through the backlog. So the unfortunate thing is I think you do have a very good point here, which is that it's going to take some time. But at the same time, though, the overall sentiment is understanding that a lot of people got wrapped up by Gary Gensler just going witch hunting and try to just do the regulation through enforcement. So they understand what the conditions on the ground are. So I believe that they're probably going to be a little more lenient on the side of just like kind of trying to settle some stuff or just straight up rescind some of the lawsuits and the litigation. So that's what I'm seeing on this end. But at the same time, your point still remains, which is that the government moves slow, unfortunately. But if there is one thing that we've seen from the Trump administration is that they are motivated to move fast. So that's the only cause for hope on the speed aspect anyways.
Or at least move fast in those items that they have the luxury of moving fast, right? You don't necessarily want to move fast in everything, but in some egregious cases, like obviously the stuff with Richard Hart versus the SEC, it's like, I mean, it's, a personal bias, but that's a pretty open and shut case for me at least. So I think you do have the luxury in moving fast in that aspect, and but time will tell.
Very true. All right, I do want to get your guys' take on another small segment here. So we have our third point. Third, the task force wants to travel to a destination where people have great freedom to experiment and build interesting things, and which will not be a haven for fraudsters. One of the reasons the U.S. capital markets are so robust, efficient, and effective is that we have rules designed to protect investors and the integrity of the marketplace, and we enforce those rules. We do not tolerate liars, cheaters, and scammers. As the task force works to develop this regulatory framework, it will give careful consideration to anti-fraud protections. If the commission spots fraud that lies outside of our jurisdiction, it can refer to the matter to a sister regulator. If it does not fall within any regulator's jurisdiction, the commission can bring that gap to Congress's attention. So, gentlemen, does this seem like a noticeable change in how they view their role in the world?
Yeah. It's like, we're not going to police everybody else's, right? If it's not in our jurisdiction, we're not going to be arrogant as to claim that it is in our jurisdiction. So,
Exactly.
Richard Hart case once again, right? It's like
There you
one
go.
of the main arguments is that I don't think the United States Securities and Exchange Commission even has jurisdiction to preside over this particular matter. So,
it's true. Although the reason that I think this is an important paragraph on this one is that it might be the libertarian side of me that is saying, have you ever seen a large-scale government actually try to rein in its own power and say, no, I actually don't want to go stick my finger in that pie?
Yep. It's hopeful, right? Because as
Rare.
you mentioned, when like the only certain thing, one of the few certain things that we can expect out of our government is that when they say things are temporary, it's usually permanent. Right.
There's
they don't
nothing
like
more
to
permanent
surrender
than a
power.
temporary government program.
Yeah, exactly.
Yeah.
Right. They don't like to surrender power once they've achieved it. Right. The people. That's why you have that statement. What was it, like? Absolute power corrupts absolutely, because people in power very seldom want to give up the power that they've achieved. Right. So the fact that, at least in this instance, right, this particular SEC says, look, we're not going to step on anybody's toes if it's not within our jurisdiction. We will let the appropriate authorities handle it, and in areas where there is no established jurisdiction, that's when we will take it to Congress, right? So even in that instance, they're like, well, Gary Gensler would have been, okay, no jurisdiction, we'll just claim it. But in this SEC, they're like, no jurisdiction, we'll defer to Congress. So even in that aspect, right, you're seeing them try to approach things from not from a tyrannical manner, right, where it's like, this is mine, that's mine, that's mine.
Agreed.
It looks to me like whether you look at earlier today in DRT we spoke about Richard Hart and sort of how he has changed his posture with the changing of the seasons. You've got the Trump administration has come in, has started a new season when it comes to administrative, who's calling the shots. I think it's going to take time to digest that change, and I think you're right, Zenith. I think getting the chair in, into the job, I think will, potentially there's room there for, once he gets into the job, to be like, okay, no, here's the timeline. We're going to go move quicker because I'm getting pushed on to move quicker than you guys are trying to move. And so it will be interesting once he's confirmed, no doubt.
Absolutely. All right. I do have my final paragraph that I want to point out here. This one was very interesting to me. I hope it's interesting to the rest of everyone as well. So we have sixth. The new commitment to a better regulatory environment should not be viewed as an endorsement of any crypto coin or token. Regardless of whether those tokens or coins fall within our jurisdiction, the Commission never endorses any product or service. There is no such thing as an SEC seal of approval. Spinning up coins and tokens is easy. If people want to buy a token or product that lacks a clear long-term value proposition, they should feel free to, but should not be surprised if someday the price drops.
Oh,
In this country, people generally have a right to make decisions for themselves. But the counterpart to that wonderful American liberty is the equally wonderful American expectation that people must decide for themselves, not to look to mama government to tell them what to do or not to do, nor to bail them out when they do something that turns out badly.
Jesus. Oh my goodness,
I
man.
can't believe
Have you
that
ever
verbiage.
heard a government talking like that?
No.
I cannot believe that statement is in here.
That's wild. I think it's
so
wildly awesome.
antithetical. It's so antithetical to what the American people have gotten used to from one side of the aisle, and to an extent, right, just their politicians in general, of this helicopter parenting, man. It's like, I need daddy government and mommy government to please come and save me, right? Please save me from these student loans that I carelessly took out without understanding what was I signing. Well, that I was signing myself to indentured servitude to the federal government, right? Please save me from COVID, right? Please make the decisions to jab me in the arm and take away my sovereignty. So like the fact that you're seeing this kind of statement from a federal entity, right? As in like taking a step back from the helicopter parenting that we've gotten so used to and that we generally push against. That's so surprising, man. It's refreshing. Please, more of it.
Changing of the seasons, man. The same regulator who has suppressed the whole market is now saying, if you get rugged, it's on you, bro. I mean, like, it could not be a more different stance.
That is amazing.
It's a classic
Agreed.
case of the pendulum swinging dramatically the other way. Because anytime you get it's like everything in the yin and yang. When you go one way, if it's too conservative, it's going to go more, liberal. It's going to go liberal. It's going to go more conservative. It's going to go yin yang back and forth. That's what you're seeing here on the pendulum. Now, the interesting thing is, I would love to see him take this further. I'd love to see retirement funds be treated this way personally. Hell, I'd like to see my Social Security that I'm docking out of my paycheck, give it to me every paycheck, and let me do as I see fit with it. I'd love it to see that outcome. But I know that's asking for way too much, because I know that
maybe that's how the U.S. government accumulates. They use everybody's Social Security money to buy.
Oh gosh. The Social Security Fund is now pulling a Michael Saylor and just buying Bitcoin.
Yeah,
No, we used to be a tech company. We just buy
Oh,
Bitcoin.
no, not Bitcoin. Straight up just memes.
That just meme coins. Oh gosh. I'll say this though. This gives me a lot of hope that there is a large scale shift of the pendulum. It's not just coming from the top down, and it's not just Donald Trump and the cabinet, which is that if you remember back when we covered the Donald Trump executive order, one of the things that I pointed out was that the language and the way they talk about the crypto experience in that executive order is it's very freedom minded, and it's very self-custody, personal responsibility minded. And it's saying, we are not here to regulate you. We are here to let you do your thing and just make sure the bad actors stay out. It is a marketable shift. And then when you get strong language like this, saying that the government is not here to bail you out or tell you what to do, that is music to my ears. This is freedom and personal responsibility. And inside the DeFi and crypto space, I think this is what people have been asking for a long, long time. And now we're getting it from inside the SEC. Remember, this is not a new appointee. This is someone that's been there. This was one of the two people on the wrong side of those 3-2 votes that we've been seeing for the last 4 or 5 years.
Yeah.
Must have been
It's certainly a
refreshing
good
for them.
start, man.
Yeah, for them to remove the muzzle and actually speak what's actually been on their mind for this one. They probably had this written up in notes for quite some time, ready to unleash it.
Oh, I believe it. I think we saw hints of this the last time that Gary Gensler and the rest of the governors were brought before Congress to testify, especially when they had these kind of like weird conflicting testimonies when asked about the same questions. But then Gary was the one doubling down and be like, nah, crypto is full of scammers, fraudsters, and hucksters, and we hate it. And it's like, all right, man, whatever. Yep. Outside of that, that is pretty much the majority of the article. They do talk about some of the more specific points that the crypto task force is going to be working on, although they did specifically talk about how they already rescinded SAB 121. So that's a bit of a win right there.
Yeah, they did that quite, because Hester came out with that tweet 2 weeks ago, I believe.
Sounds about right.
Yep. Mm-hmm.
Yeah. Outside of this, though, they talk about security, scoping out coin and token offerings, registrations, special purpose broker dealers. That's a fancy word that you might remember from the Texas case that we covered, where they talked about how allowing people like Robinhood or Coinbase to not register as broker dealers, and then also trading houses or whatever. There's a lot of good stuff in here. But then also, if you wish to engage with the Crypto Task Force, they are taking written submissions, by the way. And there will also be a conference and monthly meetings in person and virtual that you can attend yourself if you so desire.
Wow, full transparency is really good. I like that.
This is good stuff.
I know they had talked about who released the whole thing on NFTs as well, as saying that's going to be more of a it's a collectible. It's more.
Oh, that was David Sachs. There's
Okay.
There's a 6-minute interview on Fox Business. I want to say it was like 2-3 weeks ago, but that is a fantastic interview, by the way. If you want to find it, it is on Nuclear Herbs' Twitter. He has the full 6-minute clip, but inside of that, he actually talks about how not everything in crypto is a security. Granted, there are some securities, but he's like, there's so many different things. You have like stable coins, you have like actual like decentralized cryptocurrencies, you have collectibles, which he's talking about the NFTs for that one. And he's like, these things can all exist and not be securities and still have securities as well. Like the way that he talks about it, it just really shows that there's a way to categorize things in a diverse manner that doesn't shoehorn everything into the stupid Howey test and try to just claim that they're all securities.
Agreed.
Yeah,
So
it's very dated. Very dated. I mean, Howey test was created when? 1930s, 1920s? When was that created?
I want to say that was 70s. It was a court case. I think you're actually closer than I am. 1946. The Howey test originated from SEC versus W.J. Howey. The case involved a real estate transaction involving the sale of citrus groves in Florida.
Yeah, I mean that's not dated or nothing. Sure, it just shows you how behind the times the government is. Anyhow.
All right, gentlemen. Final thoughts on our new SEC roadmap. Is this what you expected? Is it better? Worse? Are we still just kind of black-pilled and say the government's going to take forever and a day?
I'm a little shocked by the verbiage that they're using and how they're talking. I mean, that's the more refreshing. I think that's it. And now, let's see it. Let's see something come to fruition.
Not surprised that they say it's going to take some time to unwind these issues. Again, government moves at a snail's pace. However, very surprising that you have a willingness to remove power from themselves and to also not abdicate responsibility from their constituents, right? Which is very like the helicopter parent thing. Like I don't know if you guys have read Jonathan Haidt, right? The Coddling of the American Mind talks about that quite a bit and how it's basically turned the entire nation into a bunch of dependents. So the fact that the government is taking a step back, at least in this case, at the current administration for the SEC, very refreshing, man.
I have not read Coddling of the American Mind. I am familiar with it. I would almost tackle it from a slightly different perspective than you, kind of like two sides of the same coin, which is that it requires a citizenry that is willing to give up responsibilities and freedoms in order for the government to start taking over this stuff. But at the same time, it is also the expansion of the government itself and the willingness of them to assert more power and more control over more things that they are not expressly given through legislation, but more of like vaguely given through legislation when it comes to like Congress passes a law that says this is the Save the Puppies Act, and they give it to the ATF and they're like, cool, go do this. And the ATF gets to make up whatever rules it wants. So it's stuff like that. I think that this is pushback from that standpoint. And I think a lot of the Trump administration, they ran during the election on the idea that the administrative state has grown too large and that for too long in the 21st century, we've tried to rule through executive order, executive decree, as opposed to writing good laws. And this is a return to go write better laws and actually distribute power down to the state level. So, soapbox over. Alrighty, folks, that is all we got.
That's how it should be, right?
Absolutely.
State level.
Right. Federalism. Yep. Oh gosh, what is it? Repeal the 16th. Stupid federal taxes is how they take your money and then they try to redangle it in front of your face and say, if you do what we want, we'll give you your money back. It's like, oh, you mean the stuff you just stole from me? Thanks. Anyways, that's neither here nor there. Folks, thank you so much for joining us tonight. We're going to go around the horn one more time and get any final thoughts. Tracker, any final thoughts for the evening? Topics, markets, SEC?
No, I just want everybody to tune in for Telegram Tuesday tomorrow. I think we do a deeper dive into more of the technicals and more of the various plays. I would probably dive into more of what you guys were talking about today, the emergency stream on DJ Roundtable, about diving into probably what the OA is doing in the pulse chain community. A lot of action happening there. RH, basically calling out Vitalik. I would love to get into some of that because there's some really good information he's been providing there about how the L2s are really, I know we're throwing on the word vampire attacking Ethereum, but Ethereum's just handing it over with not even really taxing them or getting anything for it. It's almost like they're just giving up. So I'd like to see Vitalik and see what they come out. I'd like to dive into some of that tomorrow. That'd be really interesting. Outside of that, everybody else, we're always streaming here. We're always going to be, pumping out content, and we'll be coming out with something else. I don't want to just come out though, but we are talking about also starting to have little segments here as another show free to everybody. And that's going to be showing off Crypto 101, basically getting people exposed to understanding the technologies of crypto, understanding and making people stronger and more empowered so they can make the better judgments for themselves. This is not, and I hope you guys understand, we're not a team here who's basically trying to spoon feed you a bunch of crypto picks and anything. We're trying to really train everybody how to think and how to act on their own so you can basically make the right decisions for yourself. And we're going to be diving into more of that around the training and learning that's coming up. So looking forward to that as well.
Love it. All right, Mr. Agent J, any final thoughts?
No, sir. I think we had a fairly in-depth and engaging, very good discussion on today's topics. And so please look forward to more of that. If you would like to engage in more of that kind of conversation, go ahead and jump into our we still don't have the QR code for our Telegram chat at the DGen Roundtable. That's where you'll catch all of us along with the rest of the DGen Roundtable team, providing you and the community with as much educational content as possible in order to help you in your financial journey. So until next time, you can find me on X at _P90Hex on X, agent_J Schroth on Instagram. And until next time, remember, man, I blanked out on my copywriting here. We know that time is your most valuable asset, and we do appreciate that you spend some of that time here with us on this wonderful Monday evening. Dace.
Yeah, look, I host Telegram Tuesdays over at DJ Roundtable. Please come join us. I'm at Dace Northall on Instagram and on X.com as well. Find me there. Come find us and stay plugged in.
Most definitely, folks. You can find the stream on YouTube at Walk the Block NDF, or Navigating Digital Finance. You're already there if you're already on the YouTube watching the stream. But outside of that, please go give us a follow on X/Twitter. We post up-to-date stuff over there, and we're also starting to respond to more stuff and post information as it comes out. Like, as of right now, I'm getting news that the Pulse X incentive token release rate just dropped by another half, so it's down to 0.05 every second.
Who posted that?
Though, I think that might be in my mastermind group, but I saw it coming by and I just confirmed it. It looks like it is live.
I posted it in DJ Roundtable. That's why I was joking.
Oh, there you go. Nice.
Yeah.
So outside of that, though, folks, Telegram Tuesday tomorrow, going to be some great alpha in there. If you like this, we're going to do even more of it, even deeper. Go check it out there. But outside of that, Wednesday's the big day this week. We have the inflation data coming out. So keep your eye on the horizon and watch out for that. Outside of that, folks, thank you so much for joining us tonight. This has been Walk the Block. We hope that we have done an excellent job of navigating the stormy crypto seas together. And until we catch you guys next time, hope that you all have a great evening. Good night.